Friday night, your phone buzzes, you glance down, and your stomach drops. Your retirement account is down again, not a little. Enough to feel it in your chest. You tell yourself, it'll bounce. You say it like a prayer. Then you open the banking app. It spins, then it updates. A new message, cold, polite. Temporary limits are in place. That's how it starts, not with sirens, with a temporary limit. And the scary part, most people will still defend it. They'll say, it's for safety. And they'll say, it's just a glitch. They'll say, it won't happen to me. That's the sleeping herd. Always calm, right before the stampede. Now look at what happened in gold and silver. Not the headlines, not the talking heads, not the noise, the pattern. Gold didn't just dip. Silver didn't just get volatile. This move was a message, a flare in the dark, a warning shot. Because the same forces that pushed metals up are the forces that can yank the floor out from under everything else. Stocks, bonds, banks, pensions. And if you're 55 or 65 or 75, you don't have infinite time to wait for Wall Street to be nice again. You have real bills, real groceries, real prescriptions, a real roof over your head. So listen carefully. I'm going to show you the one thing most people refuse to look at. The one chart that explains today's move in gold and silver. And more important, the next signal. Because once you see it, you can't unsee it. And if you ignore it, imagine this. You wake up one morning and your life savings has a new owner. Not a thief in a hoodie, a suit, a form, a rule change. Now here's the part they don't want you to connect. Gold and silver aren't just investments, they're lie detectors. They expose stress, they expose weakness, they expose fear inside the system. So when you see a violent move, especially in silver, you're watching the system's plumbing shake. And plumbing always breaks in the same way. First, pressure builds, then the pipe rattles, then it bursts. And everyone acts surprised. Let's talk about the one chart. It's not fancy, it's brutal. It's the chart of the dollar and the interest rate machine behind it. The thing that decides whether paper assets feel safe or feel like a trapdoor. When the dollar spikes and rates jump, paper traders get crushed. Leverage breaks, margin calls hit, forced selling begins. That's not drama, that's mechanics. And silver? Silver is the canary in the mine. Small market, thin liquidity, easy to whip around, easy to slam, easy to shake loose. That's why silver can surge like a rocket and fall like an elevator with a cut cable. Gold is different, bigger, deeper, held by central banks, held by institutions that don't panic sell because their credit card bill is due. So when the pressure hits, silver screams first. And that's exactly what you saw. Now zoom out, because the real story is bigger than a one-day move. Why was there so much leverage chasing metals in the first place? Because the system trained everyone to gamble. For years, they punished savers, near zero rates, printed money, stimulus, debt everywhere. They turned the economy into a casino, bright lights, free drinks, endless games. And every time you tried to be responsible, every time you tried to save, they quietly stole from you. Not with a mask, with inflation. Inflation is a silent pickpocket, a slow leak in your lifeboat. It doesn't crash the ship in 1 second. It floods it inch by inch until you look down and realize your feet are wet. So people chased. They chased stocks. They chased crypto. They chased real estate. They chased anything that looked like it could outrun the leak. Then gold and silver started moving, and the crowd piled in, fast, emotional, FOMO, especially in silver. And when the momentum flipped, it snapped like a rubber band. That's the mechanism, but the deeper mechanism is darker. Debt. The kind of debt you don't pay off. The kind of debt you roll over forever until the interest eats you alive. Here's the number they never say slowly. $38.5 trillion. Let that sit in your mind. 38.5 trillion. Most people can't picture a trillion. So let's make it real. 1,000,000 seconds is about 11 days. 1,000,000,000 seconds is about 31 years. 1,000,000,000,000 seconds is about 31,000 years. Now multiply that by 38. That isn't politics. That isn't opinion. This isn't a theory. This is math. And math doesn't care about promises. Math doesn't care about speeches. Math doesn't care about elections. When the math breaks, the system does what it always does. It changes the rules. They can't default like a person defaults. So they default the sneaky way. They pay you back with cheaper dollars. Same number in your account, less food in your cart, same pension check, less power in your life, same interest on paper, more fear in your stomach. And now you're seeing why gold and silver matter. Because gold and silver are not somebody's promise. They are not a bank's IOU. They are not a politician's vow. They are real. And real is the enemy of a system built on confidence. Now, I already hear the pushback, but my bank account is insured. Let's talk about that safety net. Insurance is up to a limit. It sounds comforting, like a warm blanket, until the fire gets big. Because insurance doesn't stop panic. Insurance doesn't stop inflation. Insurance doesn't stop the rules from changing. And if the crisis is not one bank, but many, the safety net becomes a web. And webs don't save you, they trap you. Ask yourself a simple question. If the fire spreads fast, do you want to be standing in line, hoping the insurance arrives in time? Because in a real panic, the system's first job is not to protect you. It's to protect itself. The corrupt system doesn't collapse like a building. It collapses like the Titanic. Slow at first, music playing, lights still on, people laughing, people dancing, people saying, oh, it's fine. Then the tilt, then the scream, then the water. And by the time the sleeping herd looks up, there aren't enough lifeboats. Now let's talk about the trap being built right in front of your eyes. A tighter cage, a digital dollar, a central bank digital currency. And you'll hear the sales pitch. It's convenient. It stops crime. It helps the unbanked. It makes payments faster. That's the brochure, but the truth is simple. This isn't just digital money. It's programmable money. Rules, limits, permissions. And once money is programmable, your life becomes programmable. Imagine this. You go to buy gas. Declined. Why? Because fuel purchases are restricted during an energy emergency. Or your spending is over the recommended limit. Or a new policy decides your purchase is non-essential. Imagine this. You try to pull out cash, but cash is phased out for your safety, so you can't leave the system. Imagine this. Your pension hits your account, but it expires if you don't spend it fast enough. Because they want to stimulate demand. And if you protest, they don't need soldiers. They don't need police at your door. They just flip a switch. That's not paranoia. That's the logical end of programmable rails. And even without that, the rules already change fast when power feels threatened. Capital controls, withdrawal limits, reporting requirements, emergency measures. The trap isn't one single law with a scary name. The trap is the direction. More monitoring, more permission, more friction when you want freedom, but less friction when they want your money. Now connect that to gold and silver, because every time the system tightens, hard assets become the enemy. Why? Because hard assets don't need permission. A bar of gold doesn't ask your bank for approval. A stack of silver doesn't require a password reset. And the corrupt system hates anything it can't freeze. Now I want you to feel this in your real life, not the economy, not markets. You, your grocery bill, your prescriptions, your home repairs, your grandkids' future. Imagine this. You go to the store. The price of steak feels like a prank. Eggs feel like a luxury. Your fixed income becomes a fixed sentence. Imagine this. Your car needs repairs. The part is back ordered. The labor costs more than you expected. And the credit card interest is a choke collar. Imagine this. You call your broker, they put you on hold, and when they come back, they read a script. Due to market conditions, translation, you're last in line. And while the sleeping herd tells itself, it'll be fine, the awakened few are already moving, not out of greed, out of survival. Now let's get brutally clear. Physical gold and silver are not investments, the way Wall Street sells investments. They are escape hatches. They are lifeboats. They are bearer assets. That means if you hold it, you own it. No counterparty, no promise. No, we'll make you whole press conference. Because the real risk in your life isn't a price chart. It's counterparty risk. It's the risk that someone else holds your money and fails, or refuses, or restructures. Your bank deposit? That's a promise from a bank, and the bank is plugged into a system, and the system runs on confidence. Your brokerage account? Those are claims, statements, entries. And in a crisis, entries can be delayed, restricted, converted. Even your safe bonds, promises paid in future dollars. And future dollars are a moving target. Gold and silver do one job better than almost anything else. They sit outside the game. They don't depend on a server. They don't depend on a chairman's speech. They don't depend on a bank being open on Monday. They don't care who wins an election. They don't care what the CPI print says. They don't care what a rating agency downgrades. They just are. That's why central banks still hold gold. Not because it's trendy, because when trust breaks, gold is the last trust. Now let's connect it back to the move you just watched. When the paper frenzy hit metals, it was loud, it was fast, it was emotional. Gold surged hard, silver surged even harder. Then it snapped. And silver's plunge was amplified by leverage and volatility, while gold found more footing because it's supported by deeper, longer-term demand. That doesn't make metals bad. It exposes the difference between paper metal and physical metal. Paper metal is a casino chip, fast, liquid, leveraged. Physical metal is a lifeboat, heavy, real, owned. Paper can be frozen, physical can be held. paper can be promised twice. Physical can't be duplicated. Paper depends on clearing houses and counterparties. Physical depends on one thing: you. This is what I mean when I say be your own central bank. A central bank doesn't invest in gold because they want a 10% return next quarter. They hold it because it settles the argument when trust collapses. That's what you're copying. Not chasing gains, copying survival. Let me paint a scene you can feel. It's a Monday, the market's open, but the bank doors don't. A bank holiday, a security review, a temporary measure. Outside, the line wraps around the building. Grandmothers, veterans, men who worked 35 years and never missed a mortgage payment. Everyone quiet. Everyone staring at the door like it's a courtroom. And the herd learns one brutal lesson. When the system is under stress, your money stops being your money. It becomes an entry, a claim, a permission slip. You can't swipe, you can't wire, you can't withdraw. Not because you did something wrong, because the rules changed overnight. And while that line grows, gold and silver don't freeze, or they don't update. They don't need a manager to approve your life. Now, another trap people fall into. They think a number on a screen is the same as weight in your hand. It's not. Paper metal is a promise that someone, somewhere will deliver if you ask. But in the moments that matter most, promises get delayed. Promises get rationed. Promises get settled. Physical is different. Physical is boring. Physical is heavy. Physical is quiet. And quiet is powerful. Because quiet means you're not begging anyone for access. Ask yourself this. If you had to leave your house fast, would you rather carry a real tool or a receipt that says, tool available upon request? That's counterparty risk in plain English. And here's what makes this urgent. Most retirees don't lose money in one dramatic crash. They lose it in slow leaks, a little inflation, a little higher insurance, a little more medical cost, a little less purchasing power. Then you look back and realize the safe plan quietly bled out. So the goal isn't to predict the exact day the system coughs. The goal is to reduce your dependence on the system, to have a portion of your savings in something that doesn't need permission, something that can't be inflated with a keystroke, something that doesn't vanish because a counterparty fails. Because if freedom goes down, metal becomes priceless. Now, here's the retention breaker most channels skip. They tell you, buy gold. They tell you, don't buy silver. Then they stop. But you deserve the real question. What signal tells you the stress is rising again? Because when stress rises, the rules change faster. The limits tighten. The herd panics. So here it is. Watch the stress gauge. When the dollar spikes and real rates rise, it squeezes leverage. It forces liquidations. That's when you see silver get punched first because it's thinner and more volatile. And when you see volatility explode, that's not random. That's the plumbing rattling. That's leverage screaming. That's the casino turning the lights on. Now let me ask you something personal. If you knew a storm was coming, would you wait until the first wave hits to buy the lifeboat? Or would you prepare while the sky is still blue? Because here's the cruel truth. When the herd finally wakes up, they will rush at the same time. And when everyone rushes, premiums rise. Inventory disappears, wait times grow. That's how every crisis works. The people who prepare early sleep at night. The people who prepare late stand in line. So what should you do when you see the signal? You don't panic sell physical metal because paper traders got liquidated. You don't treat a lifeboat like a lottery ticket. You use the signal as a reminder. This market can move violently, and when it does, it reveals who is exposed to the system and who is outside it, because the corrupt system wants you trapped in digits. Digits they can track, digits they can tax, digits they can limit. They don't want you holding something that can't be edited. Now listen carefully. I'm not telling you to go all in. I'm telling you to stop sleeping, to stop assuming the safety net is infinite, to stop believing the people who created this debt monster will protect your retirement with pure intentions. Because when the math breaks, they don't sacrifice themselves. They sacrifice the herd. They sacrifice purchasing power. They sacrifice savers. They sacrifice retirees who did everything right and trusted the rules would stay the same. That's why this channel exists. Not to entertain you, to warn you, to pull you out of the herd before the gate closes. So here's the simple framework. If your wealth is trapped in promises, you have counterparty risk. If your wealth is partly stored in physical bearer assets, you reduce counterparty risk. You give yourself options. You give yourself oxygen. You give yourself a lifeboat you can actually climb into. Because imagine this, the day the limits hit, the day the ATM says, try again later, the day your broker can't locate shares, the day the government announces a temporary measure, that day your neighbors will scramble. They'll beg for answers. They'll say, why didn't anyone tell us? And you'll have two choices, regret or readiness. Now I'm going to leave you with a thought that should stick. The system doesn't warn you with a letter. It warns you with signals. It warns you with gold holding firm while everything else shakes. It warns you with silver whipping like a trapped animal. It warns you with volatility surging. It warns you with temporary limits. And the next time that one chart flashes stress, it won't just be metals moving. It'll be the system telling you the lifeboats are leaving. So subscribe to AG Reporter if you want to stay awake while the herd sleepwalks into the storm. Not for entertainment, for survival. Because the only question is, when the deck starts to tilt, are you still listening to the music? Or are you already holding something real?